Is an interesting day to discuss. I'm going to open up the chat so you guys can chat and ask me questions. And what I'm also going to do is I'm going to also answer your questions you left me. Oops, that you left me on the Woofoo form. So today is a really interesting day. We have a crazy week in the stock market with banks failing. That is scaring the hell out of a lot of people and making a lot of people nervous. But you also might have noticed that today, if you have a diversified portfolio, chances are you made some money. Today was a really good day in the stock market. It was a rebound, a massive rebound from what you saw last week. You saw a lot of carnage last week, a lot of risk, a lot of uncertainty, and so now the stock market is up. And what made it go up today? Well, the reason it went up is because there was inflation data released, and there's evidence to say that inflation is, kind of taming itself a little bit. And there's also even more evidence that the Federal Reserve is not going to do further rate hikes, which is the other thing that's been driving people crazy and causing the market to drop. Now, give me a yes if you made some money today. Let me know how your portfolio is doing. If you woke up and saw some green, if you didn't, let me know. And I see someone's asking, where can you find the stock picks? If you log in at theblackstockmarketprogram.com, theblackstockmarketprogram.com, look under the section called What Dr. Boyce is Buying. And I'm going to put another list of stocks in there later on today. So you can go in there and log in and get that. Okay, good. All right, good. I see a lot of green. Okay, Keith and James made some money. Jermaine made some money. Let's see here. Okay, Picola made money. Sean made money. Good. And Ronnie says, when should we worry about our money in the bank with what's going on? Let me just tell you, I don't think there's going to be like a whole bunch of, failed banks just flopping everywhere. There's going to be more. That's the interesting thing. There will be others. So as much as I'd like to tell you that this is the last one, it can't happen anymore. That wouldn't be true. It's probably going to happen to another bank. It probably won't happen to your bank. I know that may not make you feel comfortable, but that really is the truth. Because, the thing about these bank failures is that there is the thing about these bank failures is that they're the Silicon Valley Bank, you can specifically isolate the unique reasons why Silicon Valley Bank was in such a terrible position. And part of it was due to, just kind of like bad luck, but some of it was also due to poor risk management. I talked to you all about, um, you know, um, I've talked to you all about sort of always considering all the things that can go wrong, right? And one of the things that happened, when interest rates were super low, and the Federal Reserve was pumping up money into the economy, is that people forgot that things that go up can also go down. So as I was sitting and I'm observing the internet, and everybody during the pandemic got really interested in, in investing and everything else, they started doing crazy stuff. It's like going to a party where you're watching people, jumping off buildings and landing in the hotel swimming pool, like jumping off the balcony, and they're not even thinking about the fact that you might miss the pool and crack your legs and whatever. Like, they're just wild and crazy, right? Because they're on this drug, and this drug is called money. And money affects your brain like a drug. The scientists, it really does, affects the same region of your brain as a drug. So people were just not really thinking about risk, including smart people. A lot of smart people that maybe 15 years ago would have been extremely careful about the risk they took, or maybe right after the financial crisis would have been extremely careful. They stopped being careful because they were like, gosh, we got all this depositor money. We've got to get some sort of ROI on this money. We got to take this money, invest it somewhere, get something back. So the Silicon Valley Bank, shareholders, not shareholders, board of directors, the management, what they did was they took the money and they invested in long-term, low-risk securities. These were not crazy assets they were buying, but the problem is that the prices of these assets go up and down with interest rates. So nobody anticipated that the Federal Reserve was going to hike interest rates as much as they did. So when they did that, it just crushed the prices of those bonds. Those their collateral just sort of drop. So then they what happened was that they had a vulnerability, and they exposed the vulnerability because they tried to go raise money to cover up that hole in their balance sheet. Well, when that occurred, that's when the Silicon Valley Bank depositors all said, "Holy crap, our bank is about to flop, so I better get my money out." So they literally transferred $42 billion out of that bank, just in a couple of days. So, you know, so it wasn't so much their fault. It was interesting. There was a lot to learn from that experience. And also with politicians, I told you your politicians are kind of crappy. They're very predictable. Um, you know, it's so funny because because they sort of ebb and flow, right? Like, so after the 2008 financial crisis, you had a guy named Barney Frank who helped write something called the Dodd-Frank Act, which was literally like just the most restrictive set of financial regulations ever seen. It was ridiculously difficult for banks to even understand or follow all these new rules they put in place. And they put them in place because we had that terrible mortgage crisis back in the day, and everybody said we don't want this to happen again, right? Well, that those rules were in place, and they might have been overly restrictive, but they were also very protective. They were really making sure the banks were safe, and they are safer now than they were back then. Well, what happened was that once everything started going well, and once everything was okay, you had, Trump pushed to minimize Dodd-Frank, but even Barney Frank, once he left his political office, he went to work for Signature Bank, which is one of the other banks that failed besides Silicon Valley Bank. Signature Bank had all of its assets seized by the feds. And when Barney Frank worked for Signature Bank, this bank that has now failed, he spent time lobbying to minimize or remove the very rules that he put in place to keep banks safe in the first place. So he was literally fighting against. They literally hired him and paid him millions of dollars to go and undermine his own legislation. And so now he, has the honor of being a former politician who's tied to a failed bank after being trusted to create legislation to protect banks. This tells you, again, it goes back to my original theory. Your politicians are stupid. And they're not consistent. They change their tune. If things are going good, they want all the regulations gone. When things are going bad, they suddenly go back and want all these laws. And so Biden right now is saying, "Oh, we need more laws in the books to do this and do that." Well, honestly, you had laws in the books already. Those laws were already there. When they look at the history of, some of these failed banks, like I know in Silicon Valley Bank, anybody could have looked at their balance sheet a year ago and said, "Ooh, this is bad. If these bond prices drop, you're done. You're toast. You have what is called a duration mismatch. Your depositors could flee on you in a minute, but you've made all these, investments in these long-term, long duration assets, meaning these 20, 30-year bonds. So in a way, it's like it's almost like if I meet a girl and I really like her, and but let's say she's a hooker and she only will stay with me as long as I keep paying her every day. And then I start making long-term plans with this girl. I go buy, a $400,000 house, and I sign a 20-year contract, and I do all these other things to commit myself long-term to this lady. But she might flee any day if she just decides that if she meets another guy that has more money, she's gone. Well, then I'm going to have a problem because all these things I've invested in, these long-term commitments I've made, are going to go to nothing if she decides that, on a Tuesday, like, "Hey, I don't want to be with this guy anymore." It's funny because they sort of say, "Why does it matter if she flees?" Well, if I'm doing it all for her, let's think about it like this. Let's say I get her name tattooed on my chest, and whatever, and I buy a house for her, and I start a business with her name on it where she's going to get half the money, and I sign another contract that says she gets half of my assets. How about that? That might be a good way to look at it, right? So you make these long-term commitments, and it's all supported by the commitment of this person who's a very short-term thinker who might bail on you in a minute, right? That's why even it's really interesting now that I'm even thinking about it. It does actually even apply to marriage. I mean, I do know a person who had a girlfriend that was very dependent on this guy. He was older. He was in his 50s. She was 32, and she lived with him and depended on him financially, but they weren't married. But she had these heavy dependencies on him, and he died. He actually had a stroke. And so her and her mother were worried because this person was the breadwinner of the family. So when he had his stroke, he was out for about 2 weeks. So they literally took the Face ID on his phone and they put it on his face so they could get into his bank account, and they drained his bank account so they could pay the bills. So when his daughter found out, who they did not like because she actually was the legal beneficiary of all of his assets, she went and had them evicted. She had them arrested, and it just did not end well. So generally speaking, from a risk management standpoint, what those stories really say and is that you always have to think about the what ifs of every situation. You know, whether you're talking about investing or anything else, and so what happened with these banks, particularly Silicon Valley Bank, is I don't think they really properly assessed the what ifs. If they had done what if they had done what they were supposed to do, um, the regulators meeting, this never would have happened. This never would have happened. So right now, the Federal Reserve is dealing with the run on the bank, the fear that was created from that. Fear has changed. Fear is different now because financial contagion as an animal, I haven't, I'm not really in academia anymore in terms of the research. When I was at Syracuse, I wrote a bunch of research papers, and you always go to these symposiums and all that. And now I'm really curious. I bet you that right now the academics are writing a lot of research papers about the speed of information and how the internet changes how financial contagion actually occurs. Before, if there was a run on the bank, and every other bank run in American history, you had to go to the bank to get your money. Pretty much, you couldn't just get it on your cell phone. Any other run on the bank, I don't think there's ever been a run on a bank that was done through Twitter. And that's what happened. The entrepreneurs started tweeting that these, banks were weak or whatever, and so people were just moving their money on their phone just like that. So I wouldn't be surprised if they put in some regulations in place to kind of somehow stop that, or at the very least keep the banks safer. I wouldn't over worry about it though. I think that one of the concerns that I have is that, especially when something goes bad, is that the alarmists start really screaming and saying, "Ha ha! I told you this is, this is the big collapse, the big calamity." I wouldn't get to that point. I wouldn't get to that point of panic. However, from a risk management standpoint, we've talked about things like put options and things like that you can put in place to protect your portfolio. I would consider doing that, especially today. Today, March 14th, 2023, the market is doing very well. This is a good day to go ahead and protect your portfolio on the downside. Remember, you buy your umbrellas when the sun is out. You don't buy your umbrellas in the rain. So anyway, I want to say thanks to those of you that joined me in Los Angeles this week. We did a 2-day Black Wealth boot camp. I was very tired, but I had so much fun, and it was so great to see you in person. The next city, I'm going to go to Houston. I'm not going to that many cities because I want to spend time with my family, to be honest with you. But I'm going to Houston, and Houston is April 21st. So if you want to fly into Houston for a 2-day Black Wealth boot camp, feel free to do that. And we had a great time working together, building economies. We were talking about how the 3 C's of building an economy, and what it would look like to get together with 8 people and form, a profitable business idea. And we had a great time, and I think everybody benefited from the discussion. So, and then also we went through my new book. It's called The 10 Commandments of Black Economic Power. And it's I mentioned it's a bestseller on Amazon now. It's #1 in the public finance category. I'm super proud of that. And I know that it's something that I know it's something that can really help you. So if you want to learn more about what we got going on, just go to my website, boycewatkins.com. That's my website. Okay, so let me hop in and answer some of your questions. If you have a question, put your question in the Q&A section. Hey, Kim, Houston is April 21st and 22nd, if I'm not mistaken. And all the dates, if you go to boycewatkins.com, all the dates are definitely there. But I believe it's April 21st and 22nd. So y'all got to forgive me. I had to squeak myself out of bed. I was on a red-eye flight all night from Los Angeles, so I didn't get as much sleep as I normally get. But I did have to take a nap because I'm actually going to go on a flight lesson later on today. And you don't fly when you're sleepy, so I'm waking up. All right, so let me see here. All right, so I'm going to find your questions too. And if you have questions about things like stock options, stuff like that, and you're in the Prime program, just know I did text you guys about a meeting for the Prime program on Thursday. Prime stands for Passive Recurring Income Machine. That's where we talk about generating income from selling stock options. So if you'd like to join, you can go to drboyceprime.com, or you can just go to my website, boycewatkins.com, if you'd like to join us on the Thursday meeting. There's a lot to talk about because tech stocks, if you notice, if you're on the Prime program, you'll notice tech stocks were the ones that got hit really hard, especially as the interest rates went up. Now, the interesting thing about tech stocks, though, is they also benefit as interest rates go down. And so now that the Federal Reserve is likely to not increase interest rates as fast as they were before, well, this is something that some believe will be a rallying point for tech stocks, because eventually all these rate hikes are going to stop. But also remember, when you're messing around with some of these volatile stocks, you always have to make sure you protect your portfolio because you can lose a lot of value very quickly. Signature Bank, for example, not Signature Bank, Silvergate Capital, for example, was one of the companies that we owned. And believe me, my put options really saved my butt because that stock that sucker just nosedived. But I liked the stock because I liked it, up until a point, because it paid a lot of income. There's you can make a lot of money from the options. So I make a lot of money every week from the options. But the problem is that if you're not careful, some of those stocks will just literally bail on you very quickly. So when you are doing the income generation thing, remember, always think about what can go wrong. Never ever assume it's always going to go right. Now let's see here. John says, "Hey Dr. B, a firm repurchased a 70 million 0% convertible note for 48 million in 2026. How does a firm benefit from this decision?" Okay, repurchase. Okay. Let's see here. How does the seller of the note benefit by giving up a $70 million asset for 48 million? Okay. Yeah, well, it sounds like what a firm did was they bought back some of their debt, and you can do that. You can buy back. If you have stock outstanding or whatever, you can just buy your own stock back. Like, it's kind of like saying, you know what, I'm not getting what I'm really worth, so I'm just gonna buy it back and I'm gonna hold it because it's a great asset because I know how much my company's really worth. It's no different from like if you get laid off from your job and you go out looking for jobs and they all want to offer you 60,000, but you think you're worth 160. So you just say, you know what, instead of selling my labor, I'm going to just keep my labor and I'm going to apply it to my own business because I'm worth a whole lot more than they're trying to pay me. Which, by the way, I think is an excellent strategy for success. So by the way, if you have a question, put it in the Q&A section so I can see it. Let's see. Mark Irving says, "I agree with you, Dr. Boyce. Dems and Republicans are on the same team." Yeah, they kind of are. They're like a Floyd Mayweather. Politicians are comparing to Floyd Mayweather because they're all on the money team. Floyd has the money team, TMT, the money team, and they actually compete in NASCAR. I went to Daytona 500 and I saw the money team in their car and everything, but they're not very good because they don't put a lot of money into their racing team. But anyway, they're all on the money team, so they're all kind of always going to favor Wall Street. They're always going to favor big business. That's just the way it works, and it's kind of unfortunate, but that's just true, and that's just what it is. So the one thing, someone asked about the layoffs at Facebook. Now, I did see that. Let's see, I'm pulling up a story here. They said Facebook parent Meta plans to lay off another 10,000 workers, marking the second round of significant job cuts announced by the tech giant in 4 months. The latest layoffs announced on Tuesday come after Meta said in November that it was eliminating approximately 13% of its workforce, or 11,000 jobs. So they said this is the single largest round of cuts in the company's history. So 10,000 jobs is about 13% of their workforce, apparently. 11,000 is 13%. So 10,000 is maybe 12%. So they've cut 13% the first time, 12% the second time. Now, if you use really bad, really rough math, you're talking about maybe 20 to 25% of their total workforce. If I'm adding that right. I mean, you can't quite add the two together, but let's just do that. So that's a big drop for Facebook. I think that what Facebook is probably dealing with is the fact that their investors have been very angry that Zuckerberg decided to pour so much money into his Metaverse project that hasn't really panned out the way they thought it would. And then also with Apple coming in to compete with Facebook in this Metaverse space, I wonder how that's going to play out for them. Also, remember that when companies do layoffs, they're not just doing layoffs because they're struggling. A lot of times, companies do layoffs because, you know, because they just want their shareholders to be happy. Their shareholders need them to make a profit. So right now, the investing landscape has shifted. Before, when everything was fine and there wasn't as much risk and the economy was booming, it was all about growth at any cost. You just spend the money, go into debt if you have to, just grow, grow, grow. Now, growth doesn't matter. Like Netflix, for example, which has been a great performer in my stock portfolio. Netflix just completely abandoned its previous model. Its previous model was to report how many new subscribers they had and to go borrow more money just so they could keep growing. They totally flipped over and started focusing on being profitable and cash flow positive and stuff like that. And they did a good job with that. So that company ended up, doing really well. I was very surprised when I looked at my portfolio and saw that Netflix and Nvidia had done so well. But anyway, Mark Zuckerberg said the job cuts will take place over the next couple of months. We expect to announce restructurings and layoffs in our tech groups in late April and then our business groups in late May, he wrote. In a small number of cases, it may take through the end of the year to complete these changes. Overall, we expect to reduce the size of our team by around 10,000 to close to 5,000 additional open roles that we haven't hired yet. As of September 2022, Meta reported a headcount of 87,000 people with 11,000 job cuts in November and 10,000 announced on Tuesday that were bringing their total headcount to 66,000. Meta is far from the only tech company to undergo layoffs amid higher inflation, recession fears, and a whiplash in pandemic-induced demand. In the first months of this year, Amazon parent, Amazon, Google parent, Alphabet, and Microsoft have all confirmed major job cuts. So basically, the whole story around tech is that tech just made just insane amounts, like gangster amounts of money during the pandemic. They were just making so much money that they really, I guess, felt they were going to make this amount of money forever. And they ended up just getting killed when the economy turned around. So when that happened, they started getting rid of a lot of the people that they didn't need anymore. And then you add in, how Chat GPT and AI has kind of shifted the landscape now. And so a lot of these jobs are being taken by AI. And also because remember, AI can program computers and they can do a lot, they can write articles and things like that. So a lot of companies are getting rid of employees they might normally pay and just, hiring AI instead. And Nvidia, part of the reason I love my Nvidia stock is because Nvidia was right on top of that. Nvidia made the best AI chip that's out there now. It's a $10,000 chip that everybody needs to really run their AI. And so they're just doing a good job. They have good management. A lot of times a good investment in a company comes down to investing in a ship and investing in the captain of that ship and believing that the captain can make good decisions about what to do with that ship. So, so I would say this. Do I think Metaverse has a future? Yeah, I think Metaverse definitely has a future. I think that, what I really am seeing mentally, I'm seeing like maybe 20 years from now, you don't just have Metaverse, but you have interesting things like a mixture with Metaverse, AI, holograms, all these other technologies kind of blending in interesting ways. Like I just imagine going somewhere and being able to get on my phone and have my car come from the house and pick me up wherever I'm at. Like, I think that's doable. Or even my airplane. Maybe one day they'll have airplanes that you can control through AI and your plane. If you're rich enough to have a plane, your plane can come pick you up and fly you home or whatever. That's what I think it's going to be. I think that Metaverse will be there because the technology is just too good. And I think that when you talk about little things like the ability of a company to train its people better. Remember, military's been using Metaverse type stuff for a long time, and then also you think about meetings, companies, we spend a lot of money having meetings. And I think that once Metaverse becomes easier to jump into, I think that's going to be the key. The problem with Metaverse, I like Metaverse. I've been in the Metaverse. I've hung out. Me and my wife used to meet, and we would meet for dinner like in the Metaverse. Like we would literally put on our goggles and go like watch a movie together on Mars or something, or like literally you could do this type of stuff with those goggles. The problem with the Metaverse stuff is like the I remember the headset, the battery would run out like in 45 minutes. So we'd be kind of mad because we couldn't talk longer because the stupid battery went out. And then also um it hurt my face, like because I wear glasses and I put those things on and my face would be like crunched up. And I did it because I just love my wife, but it was really fun. I had a little avatar that looked just like me, as a little bald guy with glasses and a goatee, and she had a little cute little red bone avatar, and we would sit there and just look at each other. And I remember saying to her, I said, gosh, it's almost like we're in the same room. Like I really feel like I'm really in the same room with you. And they monetized it, so when we wanted to watch a movie, we watched a movie called There Will Be Blood by Daniel Day-Lewis, and my wife recommended. And we paid money to watch the movie, to go to the movies. We got to pick where we wanted to watch it from. So we watched it on the side of a building in New York City, and they projected it on top of the building next to it. And it was great. So I think that if they can find an easier way to do that, like, so if that headset was not hurting my face, if if the battery would last maybe 6-7 hours, where we could really have a full immersive experience without worrying about having to remember to charge it up. And I think Metaverse is going to be fun. I think it's going to be I think it's coming, and then now they're getting to the point where they can do holographic technology. I don't know if you've seen where this guy had this little booth. It's a little awkward now, but it's going to be really cool when they finally when they integrate it properly. But he literally would stand in front of a green screen in the city that he was in, and he would appear. The other person would have a box across the country, and he would appear inside the box, and you would almost think you could reach inside and touch him, but you couldn't, because it was a hologram. But it was very realistic. So it just takes data and all this stuff. But I just really I think it's real. I think Zuckerberg is on the right track. I did not agree though with his decision to completely pivot the company like that. Do I like Facebook stock? I'm not really a big. I do own some Facebook stock, but it's not like my favorite stock, because I wasn't real sure about that decision to just put so much into the metaverse. Also, I don't know if Facebook's business model is going to work that well, because they were too dependent on Apple. Apple screwed Facebook. That's why Facebook's revenue has been dropping and not growing the way it used to, is because Apple came in and made it harder to track customers so you could advertise your products with them. So Facebook's advertisers are mad because now the data they're getting is not as good as it used to be, because Apple was their connect, and Apple's like, screw you, we don't have to do anything for you. So really Facebook, this is why Zuckerberg tried to have his own phone so he could get to the consumer directly, but it didn't work. So Apple has they're in in the South you might call this the catbird seat. Like they're in the driver's seat. They are the ones that determine how this metaverse thing's going to go. So when they make their metaverse play, when Apple comes out with their little goggles or whatever they come out with, it's going to be easier for them to get certain things done than other companies. I suspect. I wonder if Amazon's also going to try at some point to have a phone too, because I know that with ad spend, a lot of people are targeting their money to Amazon now instead of Facebook the way they used to. So it's an interesting game. It's interesting. So I have more of an investment in Amazon, not so much in Apple, but in Facebook, it's like a little bit, because it could go up. I mean, the stock could go up, and Facebook has a lot of value there, but it's not a stock that gets me excited. All right, so let me pop in, and you guys submitted some more questions in advance. If you log in at the blackstockmarketprogram.com, you can leave your question for me, and I'll answer your questions first. Natasha says, hey, Dr. Boyce, which crypto cold storage wallet platforms do you like the best? You know what, Natasha, I don't do crypto cold storage, actually. We do have a crypto club with Jamar Montgomery in the Black Business School, and they're the experts on crypto cold storage. To be honest with you, I don't do cold storage. I know that my crypto friends get mad at me, and they tell me like that's bad. You shouldn't do that. But it just doesn't matter that much to me because I'm not a huge investor in crypto. Like I used to believe in it a lot more than I do now. I'm not saying I don't believe in it. I just there's just so many problems. So many things keep going wrong with crypto. Um, and Bitcoin is being manipulated. There are people that are pushing the price up and down and all this stuff. I'm not saying that it's going to go away. I'm not saying that it's bad. I'm just saying that there's so many things that have to be fixed in order for crypto to work. And because right now the crypto space just doesn't look so good in terms of risk and all these, just explosive, very public disasters. Maybe it's all, planned. Maybe somebody did it to make crypto look bad. I know people have said that kind of thing. I don't know. Maybe it's possible. I told you there's a lot of manipulation, but I'm just not as enthusiastic. I mean, I do think Bitcoin, if they left it alone, I think Bitcoin could get up to $100,000. I also think now I will say this. I do believe that once everything kind of the dust settles and the economy gets better again, I think that Bitcoin's going to start going back up again. So that's why I hold my Bitcoin, I hold my Ether. I'm just curious to see what happens when these regulations are done, because they're going to regulate it more because they have to. They have to regulate it more because when people start getting scared and they start losing money, then the regulators come along to protect the public, allegedly. Alex, what's your perspective on black-owned stocks? There aren't that many. I know about TV One or Urban One. I owned that stock for years. It didn't do hardly anything. It was. I'm not gonna say it's a terrible stock, but my lord, it just didn't. I don't know what's going on with that stock. I mean, that stock has been sitting in the same little pocket, price wise, for a long time. In fact, let me share my screen and show you all Urban One stock. I mean, it's you've made money. Like if you bought it, in 2018, you have made money. So that to that their credit, that's true. Now, if you bought it in the last year or so, you probably didn't make any money. You might have lost some money or whatever. But you see the stock trades in this range. It's 553 now.